Hey traders, hey, it's Greg with Advanced Investors for another Monday macro and SPY update. I'm changing things up a little bit using Camtasia and not publishing through TradingView anymore. So this will go direct to YouTube, and I'm hoping a bunch of my TradingView people came over. Anyway, remember to like and subscribe. That helps me stay motivated in creating the videos and going through this. I do it anyway. So I just like to post what my thoughts are, and I have a chat group and belong to another one, just to share ideas and brainstorm. And honestly, that what I liked about that is it's really where I've learned the most over the last probably 5 years of actually watching candles every day, right? Maybe not every day, but I've been investing since longer than that. But it was mutual funds and I don't know. This is active trading more. So that being said, I am a long only trader. I shouldn't say long only. I'm a long trader that does do some day trades. I do have a swing going on right now. So anyway, that's not what we're here to talk about today. I will get into the macro of what happened last week and what's going to happen this week. So let's jump over to, let's grab one of the economic calendars. I have three because some are better than others for certain things. Look at here's this week on TradingView, and I like TradingView because I use TradingView as my charting tool, obviously. But you can look at the calendar and literally jump to charts from the calendar. So like, there's our building permits chart. That's back in February. Let's see, when is this coming out? Coming soon. All right, it's 7:30. That should have been out already. So one thing I don't like is that's already late. Let me try to refresh. It still says coming soon. See how when I did a refresh, it jumped to upcoming. So let's do this week. We'll take off high importance this week, and you can see what we have a lot in here that I've noticed is Fed speak coming up this week. This is a little better look at it. I did grab a screen pop of this, so let me, that I actually marked up. Let me see if I can jump to that and bring it over to us. So you can see in here where I've marked a lot of Fed talk. That's just to beat down the market. I mean, I don't know if I even believe half the shit they say anymore. I mean, honestly, they just keep saying the same thing. So 2% dual mandate till forever until it works, right? Okay, I don't know why they have to keep telling the market that, but it does make the market move sometimes, especially when they get into some deeper weeds stuff. Like once they accidentally said recession by accident, well, market didn't like that. Anyway, to jump back into it, otherwise we've got some housing market stuff coming up. I follow this because I'm a real estate investor. I'm actually, next Monday I have a closing on a duplex, so I might do my video a little later, or maybe even Sunday instead of Monday. Housing starts and permits, that's one I watch closely. Wednesday we don't have a lot besides Fed speak. You know, I know we got some guys that are into this petroleum stuff, some guys in my group, and it's nothing against it. I'm learning it from watching how they do it, honestly. So I've just started paying a little closer attention to that. You notice it does have the red star, so that's a market mover per the calendar. Jobless claims. This is really what I'm interested in seeing, is these jobless claims as we continue going down the road of what are the Feds going to do, right? Because obviously there's a disconnect with markets and the Feds on that. Last week we had CPI, PPI, retail. I don't know. I thought it was kind of a mixed bags. We started bank earnings. We'll talk a little bit about that too. I thought that was better than. It's odd though, you know, they reduce the expectations, then they beat. But it's always interesting to see we have bank issues again, and yet they report great earnings. So I don't know how they need to fix that. Long story short is they reported good, and that's just reflected. So overall, last week we did have a decent market week, and we'll jump into that too. The last thing I'll just talk about will be a PMI composite flash. Those have become more and more important. But I think the big one is really this big jobless claims stuff going on. We got to keep an eye on that, and jolts and all those sort of things, because I think that's going to be the tell of what's driving the Fed next. That and CPI comes out, I believe, next week. And then the Fed's going to dark out. I think they might even do that at the end of this week. Or don't hold me to dates, but that's all going to start happening now while earnings is going on. So since we're talking macro stuff, I guess one other thing. Let me see if since I had this up, I mark these charts up when I go through them in the morning with the guys that I work with on my chat group. So I post this a lot. First thing I'd point out was GDP last Friday. They did a reread on that, and it actually went up from 2.5% from 2.2%. So GDP for Q1 is actually still on the rise. The calendar we talked about. This is for just today, so I don't really want to get into day trade stuff. Fear and greed, I will point out, went to greed last week, and if you look back a month ago and a year ago, we were in fear, so it's interesting how quickly that changed. Another thing that's changed drastically over the weekend, I noticed, was really this the FedWatch probability of a 25 basis point hike. You know, I've been saying this for a while. It's baked into the cake, but we jumped a lot since I looked last week. It's about 70 in the low 70s, I think, but still pretty solid. Now look at 88.1. No potential for a 50, only a little bit left on a pause, which is a great feed into the next chart I have, which is the future probabilities, right? So we're looking at, in the future, the market. The market, you got to remember, this is not the Fed's dictating what's on these charts. It's the market on this FedWatch tool. And really what that is a bunch of analysts saying what they think is going to happen, right? So I call it the market. So the market thinks that we're going to start getting cuts in September, but we're going to hold this 25 basis point that we've got coming up in May. I'm convinced that that's going to happen. 88% probability per even the analysts. And then it looks like they think it's going to hold. Now, the Feds talk about increasing one more time, but I think they're going to wait for the PCE data to come in and a little bit more jobs data. And we've got some time before the next meeting, which would be out, our next Fed meeting will be, bear with me here, it will be, well, we got the one in May we were talking about, but then 14 June. So I think if we see anything that's that June one, we know we're going to get the 25 basis point there. Interesting thing, if you compare, you can look at, this is our current range, right? This is where the Fed thinks we're going. You can see how much that's changed literally, in the last couple of weeks. There were some people that wanted to cut and a pause, and just isn't in the cards. So back to this stuff. Let's look at, if we look at last week on a heat map, you can see we had a lot of, the financials actually performed pretty well. Insurance didn't, it looks like, in the subgrouping here. We had mega caps kind of, I don't know, Microsoft obviously down, but some of the really big mega caps up a little bit. Not a big thing. A lot of industrial stuff and energy probably kept this S&P up from last week. Again, we'll get into some charts of that quickly. I'm just going through the data drop stuff. If we look at it at a sector-only point of view, financials had the big gain last week. Industrials also did quite well. Materials, consumer discretionary, and then real estate keeps bombing out. I'm fairly sure that's related to the banking issues and potential for recession, which means people lose jobs, which means they can't pay rent, which means they can't buy houses. The interesting conundrum I see there is I'm still seeing people lining up to buy houses. Is that because of low inventory? I think so, but I'm seeing people parking around the block to come look at duplexes I'm selling. There's no lack of buyers. What I will say is the banks, I've had several, the one I was saying is going to close this Monday. I've had 3 failures, 2 based on financing, where they had pre-approval letters, and then the banks failed, and then they went back into underwriting, and underwriting said, nah, you're not quite good as we thought. So I think that's the financial conditions tightening we talk about. We'll talk about that as well. Some rotation out of utilities. Again, that's an interest-sensitive area. I don't know. It just looks like rotation to me here. See if there's anything else I wanted to grab here. We talked about that. PEs, So you'll think of a S&P 500 PE ratio. you want to say what's Midland, 15 and a half, 16's kind of strong. This was actually in the 17s 2 weeks ago. We're back up over 18. This is real time. If we look a year ago, 24, I mean, that's ridiculously expensive. And the 12-month forward is still, it's kind of flush with where we are. If you look at it like buying a car, like I said last week, you got to go, what's my car worth? Well, historically, it's been worth 16.5, 15.5 maybe. Maybe they'll get you find a cheap one at 14. Now this isn't per equity. This is just for the S&P 500 index. So I think that's still expensive and has some deflation to come down, even as bearish as a lot of the indicators I'm seeing look. I also point out some of the other indexes in here. This update's on Friday nights, so I'll just post it for informational. I'm an S&P 500 guy, aka why I follow the SPY and actually buy and trade the SPY, which I want to do, but now I feel like I missed it, and I got the FOMO. It's okay. I think based on some of the stuff I already showed you, I think it's going to revisit it. Again, this is way too expensive. It seems like all news, good or bad, seems to be good news again. Big thing to start talking about is earnings. We had the banks last week. We had Charles Schwab this morning, a few other banks, some tonight. I'm interested as we get deeper into the regional banks. We had the Silicon Valley Bank failure. That'll be something to keep an eye on, those kind of banks. For the most part, the banks have been beating these earnings, right? Well, let me show you something about that. If I pull into a 5-minute chart of Schwab, here's their earnings, right? They announced their earnings. We had a sell-off. Let's just take a look at some detail here. So they beat on the top, surprise to the downside. They didn't beat on revenue. That might have been why we saw this sell-off here. Sometimes it's hard when you look at the condensed earnings reports as to really what's going on. Why is the market reacting the way it is? But you can see the MACD did a kind of a freak out. Now it's heading back up. So we're back to the opening gap, and it looks like it's starting to sell. Normally I don't show 5 minutes in these videos, but being that it is one of the earnings, so like we could look at Wells Fargo from last week on a 5-minute over days, and you can see where they hit their earnings. Now they beat on both the top and bottom. It showed pre-market, but look at, kind of came back in line right to close from the day before, and then today now they're catching a bid. So that's a great reason to look at the XLF on a 5-minute. Again, I'm trying not to do daily stuff, but this is across days. Does that not look like it's flagging to you? I don't know. It's kind of a weird looking flag, but again, we're in a 5 minutes, so maybe if we flip to a daily quick, maybe it's just a bunch of chop, honestly. Now on the MACD, this looks bullish here, or MACD, RSI, those both look bullish to me on the daily. So let me put my stuff back to the way it was quick. So that's kind of where we are. Sorry, jumping around a little bit. Maybe what we'll do is we'll start looking at some stuff like financial conditions. So this is an inverted bar chart, so keep in mind green means down and red means up on these. Overall, what I'm seeing here is a channel, literally a channel. An uptrend channel there of financial conditions actually easing. So, okay, with that being said, let's look at, I got my charts all mixed up here. All right, monthly. So on a monthly, I also noticed we're in an uptrend, right? This is 1, 2, 3, 4, 5, 6, 7 months. We've been in basically an uptrend. If you could look at the MACD, it's above the histogram, which tends to mean that it is in an uptrend cycle. And now we see the MACD actually curling up, and if it crosses the signal, that's a very bullish indicator, especially on a long-term monthly chart. RSI is also increasing. You can see it a little more well-defined when I zoom in. One thing you'll notice on this chart is I fibbed it out from the bottom of the COVID low to the blow-off top. and fibbed it for retracement to that. And we hit about the 50% retracement line here back in October. Wish I would have bought more then. Everybody said it's got more to go and visit the lows, and we didn't. Maybe we will, who knows. But right now, this is a bullish pattern. On that, let's jump to a SPY weekly. Again, we're in this uptrend. We've actually had what 1, 2, 3, 4, 5, and we're in our 6th week now. This is this week just starting, so it's the beginning of the first day of the week. Let's not read too much into that. But look at all these other very bullish candles. Again, trending up. Look at this MACD. It's making a run. Even the RSI is a pretty steady line up. So if we look directly at last week, okay, now we're up 0.8%. So if you look back over, let's look at since our climb started in March up to the end of last week, we're up 10% on the SPY. That's fantastic. If you're a long person, if you're a short person, you're probably upset about this because a lot of indicators said things were going to go lower. And again, on technical, I'm not seeing it, especially now we're starting to clear this support or resistance line. I see a little bit of minor resistance up here. Again, we're on a weekly, so it's probably not as visible. We go to a daily, you can see kind of where that is. We punch up through that, and boy, if RSI doesn't look, and we know we can stay overbought up here for a while, MACD is looking strong, and it is starting to pinch a little bit. So this is a real tell in this 414 range here on a daily for the SPY as to what's going to happen this week. We break above it, we could, 420 or 4200 for those that watch the futures or the SPX, not out of the question. That's weird. Daily morning routine. I got my charts a little bit mixed up. This is another daily where I put like a supply zone in. You can see last week, Friday, we punched out of this supply zone, and that's where basically a lot of buyers are coming in, and there's plenty of sellers in this supply zone. So it usually creates volume, but it doesn't go anywhere because, the buyers and sellers are the bulls and bears are fighting right there. Again, we're going in today. I don't know, this looks like a pretty bullish chart to me. Look at all of these momentum indicators. Now we are getting up to this oversold spot here even on a daily. So we'll start seeing if this 415 region, 414, 415, starts to provide some resistance this week. Earnings might influence that also. Might get into some 5-minute stuff here. I don't want to do that. So that's really the quick update. I'm sure I missed some things. Let's take a look maybe at our earnings. We looked enough at the calendar stuff. Let's earnings. So if we go into tomorrow, who do we got? Let's do all Bank of America, Goldman Sachs Group, Lockheed Martin. I own Lockheed Martin, so I'm kind of interested in that one. You got Netflix, United Airlines. We got to remember, airlines are big in the PCI data. ISRG, I'm an owner of that. That's a great stock. I've been real happy with that. Actually, I buy that through a managed portfolio, hedge fund type of thing. From reading the markets, Matt Capital does a great job with that portfolio, I think. So anyway, we can go through every day, but I think you get the gist of it. We're going to get more banks and things, and then we're going to start sliding into the tech as the next. Let's see. Let's jump all the way to Friday and see what's out there. Procter & Gamble. Here we go. Freeport McMoran. Interestingly, when I was in Arizona, I ran into one of their testing plants up by the Tortilla Flats up in the mountains. So it's kind of cool to see because I watched Freeport McMoran pretty close. I'm sure I'm pronouncing that wrong. But they also are influenced by copper, big chip stuff, bit of a leading indicator. So that'll be a good one to watch as well. So again, that being said, I'm going to keep these a little bit shorter. I got to fumble with the software to upload it and all that to edit it. It'll be kind of fun, but I'm a little late, so I'm sorry about that. I'll get better as we go, and it does have a lot more effects and editing software, so I'm hoping just the quality improves on these videos. So if you can like and subscribe, that's cool. I'm trying to grow my base a little bit, not because I'm trying to. You gotta have 1,000 subscribers to make money in YouTube. I'm at like 60 or 61 right now, and thank you for all of that support. I'm hoping some of the TradingView people come over, and not that I need to get to 1,000 because I don't know how long that'll take. I'm just having fun here. I hope it's helpful to other people. And if there's certain topics you want to know about or certain stocks you want me to look at, shoot me a message, and maybe I can do a spin-off video for just something specific as well. Something I've been thinking about. All right. Have a great week trading. Good luck with earnings. Keep an eye on your calendar, and we'll be talking soon. Thanks. Bye-bye.